All right, let's dive in. Today, we're going to break down a really compelling theory that's been making the rounds, the idea that we're heading for a massive, and I mean massive, Bitcoin supply squeeze. Let's get right into it. It all boils down to this one simple, kind of mind-blowing fact. There is a single person out there buying more Bitcoin than is even being created each day. Seriously, this one little piece of math is the key to this entire story.
Okay, so look at this. This chart puts it all into perspective. Every day, the Bitcoin network spits out about 450 new coins. That's the total new supply. But one man, Michael Saylor, is on average buying more than that every single day. You don't have to be an economist to figure out what happens when the demand from just one source is bigger than all the new supply coming online. Something's got to give.
So who is this guy? Who's the person basically cornering the market on new Bitcoin? Well, let's start with him. His name is Michael Saylor, and his company is MicroStrategy. The scale of what he's doing is it's hard to even wrap your head around. Look at that number. That's how much Bitcoin MicroStrategy holds. To put that in perspective, that's a huge chunk of the total 21 million Bitcoin that will ever exist. It's basically been vacuumed off the market and locked away.
And here's where it gets really interesting. The whole playbook used to be buy the dip, right? Wait for the price to crash, then scoop some up. He's not doing that anymore. He's buying aggressively, even at all-time highs. Now, what does that tell you? It signals this incredible belief that today's prices are going to look ridiculously cheap very, very soon.
And his vision, well, it goes way beyond just a good investment. Listen to this quote. He's not just talking about digital gold. He's framing Bitcoin as a weapon in a geopolitical game. He's talking about a future where owning Bitcoin means controlling the world's reserve. It is a vision of pure global dominance.
But here's the thing. It's not just one guy anymore, not even close, because the next wave of buyers is here, and it's the one that many people thought would never, ever show up to the party, Wall Street.
And their change of heart has been just breathtakingly fast. I mean, just a year ago, you had the big banks, JP Morgan, Citi, Bank of America. They were all calling it a scam or, just staying away. Today, they're falling all over themselves to offer custody, lending, and ETFs. It is a complete 180.
And this isn't just talk. Look at the numbers. 8 out of the 10 biggest banks in the US are now in the Bitcoin business. And you have to understand, this isn't about some newfound belief system. This is about money. Price attracts balance sheets, and those balance sheets then push the price even higher. It's a feedback loop.
Now, this is a really critical point. The Bitcoin ETFs weren't about getting a pat on the back. Oh, Bitcoin is legitimate now. No. They were about building a high-speed pipeline, a financial API, if you will, to connect Wall Street's massive pools of money directly to Bitcoin. It's about making it dead simple for pension funds and sovereign wealth funds to move billions of dollars into the asset.
So, what's making these huge, slow-moving institutions jump in so fast? Well, the story you usually hear is that it's all driven by fear. You hear it from the top dogs like Larry Fink, the CEO of BlackRock. The argument is simple. People get scared about inflation, about governments printing money, about instability, so they buy Bitcoin as a safe place to hide, a hedge.
But here's the twist in this theory. What if these massive institutions, whose entire job is to manage risk, what if they're not actually scared of Bitcoin's wild price swings? What if they're afraid of something totally different?
And there it is. The fear isn't about volatility. It's FOMO, the fear of being late. It's the fear that if they don't get in now, they won't just miss out on the upside, they might get priced out forever. They're scared of having zero exposure to what might be the next foundational asset of the global economy.
This all connects to a much bigger idea. The theory goes like this. AI is coming, and it's going to disrupt almost every business model on the planet. So where does capital go when everything is being turned upside down? It searches for a safe harbor, something that can't be competed with, copied, or disrupted. And the argument is, Bitcoin is that safe harbor. It's immune.
Okay, so we have a hyperaccumulator and we have Wall Street. Now let's zoom out even further, because the biggest players of all are now quietly stepping onto the field, nation-states.
And here's the thing about a country. Unlike a public company, a nation-state doesn't have to tell you its strategy. When they decide to start stockpiling a strategic asset, they do it quietly. They do it in the shadows. Case in point, the nation of Bhutan. It came out that they had been secretly mining Bitcoin for years, using excess hydroelectric power that cost them basically nothing. And get this, their Bitcoin stash is now estimated to be worth 40% of their country's entire GDP. Think about that for a second.
And this is where the game theory gets really intense.
So Pakistan announces plans to mine Bitcoin using a huge amount of wasted energy. If they go through with it, can their regional rival, India, just sit back and watch them accumulate a global reserve asset? No way. This kicks off an arms race, a competitive scramble for a scarce asset that forces every other country to make a move.
So let's put all the pieces together. You have a mega buyer like Michael Saylor. You have Wall Street building the on-ramps for trillions of dollars. You have institutions piling in because they're afraid of being late. And now you have entire countries quietly stacking for sovereignty.
This all leads us to the final, terrifying question. All these new players are buyers. They're accumulators. They have long-term plans, and they are not likely to sell anytime soon. So, where does all the Bitcoin they're buying actually come from? Who is selling?
The answer, according to this theory, is stark. It's retail. It's the individual holders. It's you. The argument is that retail is the last pool of available supply left, and these giants are just systematically absorbing all of it, bit by bit, until one day there's just none left on the open market.
So, the ultimate takeaway from this theory is that this cycle might not end with the usual spectacular price crash. Instead, it ends when the market itself just breaks. It ends when the overwhelming demand from these giants finally smothers the last bit of available supply, triggering a full-blown supply shock. And that leaves us with one final provocative thought from the source material. In this global race to acquire a truly scarce, digital, sovereign asset, there are no consolation prizes. There is no second best. Thanks for tuning in.